Hello, this is Michael O'Leary once again from By the Book Taxes with another video in my series on IRS tax collections. The last video I did was on how IRS tax liens work. It was an overview. I'm going to go into a little more detail now. I'm going to do 4 more videos on IRS tax liens. There's typically 4 words that you hear relative to IRS tax liens, and they are subordination, discharge, withdrawal, and release. I'm going to do a video on each of them in the next couple of weeks. Today, we're going to talk about subordination or subordinating an IRS tax lien. So what does that mean? Subordinating means letting another creditor, like a mortgage, get ahead of the IRS. Typically, a person will have numerous debts, mortgage, credit cards, maybe the IRS, maybe other things, mechanics liens, etc. So typically, the first creditor in line for a person is the mortgage. They get a house. Then subsequently, they get some IRS debt. Then down the road, they may want to refinance their mortgage, and the bank gets nervous about issuing another mortgage, refinancing the mortgage when they see that IRS tax liens exist. So subordinating an IRS tax lien most commonly occurs when someone is trying to refinance an existing debt, most likely a mortgage. The IRS will agree to subordination if the refinance reduces the monthly mortgage payment, which allows a higher IRS repayment. The IRS will allow the tax lien to be subordinated. In other words, they will allow the bank to get ahead of them in the creditor line if, as a result of the subordination, the taxpayer will have more money on a monthly basis that they can send to the IRS and thereby pay off their IRS debt sooner. I'm going to share my screen and show you how this works. Okay, so here is the form that the taxpayer would have to submit. This is a discharge. I'm going to show you the subordination. Okay, so it's form 14134, application for certificate of subordination of a federal tax lien. And the information is very straightforward. I'm just going to walk you through this. So the first 3 parts typically are the same person: the taxpayer information, the applicant information, and the property owner. So if a property owner owns a home and has tax debts, it's the same person. Part 4 is the tax professional who's helping them file this. Part 5 is the information associated with the bank that's doing the refinance. Part 6 tells you how much is the existing loan and how much will be the loan associated with the refinance. Look at Part 7, basis for subordination. Look at number 2. The issuance of the certificate of subordination will increase the government's interest and make collection of the tax liability easier. That's what it's all about. Does doing this refinance give the taxpayer greater cash flow, which will enable them to pay their IRS debt off faster? If the answer to that question is yes, the IRS will agree to a subordination. Part 8, here's the description of the property. Is it a house? What is it? The address of the real property. Now, here comes all the loan documentation that they want to see. Appraisals and valuations at the county level. Part 10, the copy of the tax liens. Part 11, a copy of the loan agreement. Part 12, a copy of the title report. Part 13, a proposed closing statement. So if you can prove that this refinance will give you more money to pay the IRS and substantiate that by sending them all of the loan documentation, the IRS will agree to subordinate the lien, let the bank get ahead, finish, complete your loan, and then start paying the IRS more money. If this sounds like you, here's my information. Michael O'Leary, Norwalk, Connecticut. There's my cell, my fax, my email address, and my website. Here's the services I provide. Tax preparation, 1040s and 1041s, and then the various resolution options. Installment payment agreements, offers and compromise, currently not collectible if there's some hardship, innocent spouse, if there's tax debt left over from a divorce, possibly penalty abatement. I can get some penalties removed if you qualify. Liens and levies, as we're talking about here. Payroll tax delinquencies, if you have a business and you're behind on your payroll taxes. And I provide CPA quality without CPA prices. So if you have IRS tax liens and you're looking to refinance at a lower rate so you can pay back the IRS faster, this is how it works. If that sounds like you, give me a call. I can help.